Rule number one, never lose money. Rule number two, never forget. Rule number one. We are on day 17 with Follow Me on Binance Coin. And though the market hasn't really taken off as anticipated, we've still made profit. One of the keys to successful trading consistently long term is capital preservation. And we are going to dive into the numbers today on what we've done in the last 17 days, 3 trades that we've been triggered into, and the results of those, and now how we need to review the market based on the information that's available. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, Binance Coin. So we've taken a nice trade over here. We made some good profits over here. The market moved up. We took another trade over here and we compounded down here. And we've been stopped out over here in all of our active open positions. So the overall profits, we're going to look at those numbers in just a second. But we're also going to look at the macro viewpoint of what's happening. So let's bring up the numbers. So we took out 3 trades and the market hasn't unfolded as anticipated yet. Because what we were really looking for was a big move to the downside, big move. And what we've just had is this little move to the downside and this little move. And now the market seems to be in like almost a uncertainty zone. It's kind of like giving mixed messages. Is it going to move up or down? And there's a couple of things that we want to take into consideration. So now let's just look at the numbers. So this is the trade log. These are 3 trades. So let me pull this up like so you can really see this really clearly. This is based on the 17 days that we've been doing together, literally the last 17 days. This is trade number 1. I always do 2 positions. I always consider the first half of the position as insurance. We want quick profits. So we made 4.2% as the whole portfolio, which is almost a 3 times multiple. 3 times multiple meaning whatever we risked, we made 3 times that. So we risked 1,000, we made 3,000. If we risked 100, we made 300. So that's what this multiple means. The first unit, we were in that trade for 1 day. So we were risk-free in 1 day. And the second unit didn't take off, 3 days. You can tell because the second unit, ideally, we want to be much bigger than the first unit, right? And that's what I refer to as the profit position or the profit wave if the market really takes off. But we got stopped out. But we still made some half-decent profits, right? And this is the art and the science of trading. We don't know what's going to happen and how the market's going to take off. And we always want to know that we don't know. We want to know that we don't know. Therefore, we have proper capital exposure, proper risk management, and then we can adjust our stop losses and lock in profits and become risk-free. And that's that quote. We're going to quote it a couple of times. And we said at the beginning, rule number 1, never lose money. And rule number 2, never forget rule number 1. And we did that really well in the first trade. Then there was another opportunity, which we took. We made 1.4% on the first unit. We was in it for 3 days. This is an insurance position. So we risked 1 to get 1. So if we risked 100, we made 100. If we risked 1,000, we made 1,000. Again, we're working in percentages because it's all dependent on account size, etc. And we can see in position 2, we only got 1%, which was less than the insurance wave. We were in that trade for 6 days, so it didn't take off. But guess what? We still made profit. Now, this is really cool and fundamental, or crucial and fundamental, should I say, where when the market doesn't go on in your favor, like it doesn't really take off to the upside or the downside, but if you can still lock in profits or break even, it means you can consistently trade edges when you're according to your trade plan. And then when it does take off, you make significant profits. And when it doesn't take off, you're either risk-free or you make a small profit. And in some occasions, you take a small loss. That's the art and science of trading. And then we took a compound position. Again, in our insurance position, we made 1.7% on the portfolio, which was just, we risked 1 to make 1 in the sense of we risked 100 or 1,000 to make 1,000. And that was on the same day. So it was like 0 days, same day. We got risk-free. And we made, 0.6% over here. It was in this trade for 3 days, this unit in 3 days. So overall, if we just highlight these numbers, this is a total of 12%, 11.9% in 17 days with a trend that hasn't taken off. So there's two blue lines, blue arrows over here. We made 12%. Is that anything to write home about? That's the 12% of the whole account size, by the way. 12%. So, that's pretty decent. But now what we're going to do is we're just going to update the wave count. So what you'll notice that I've done over here is, let me get rid of these lines now. These are all stopped out, so there's no active trades. What we're doing over here now is we're just updating the wave count. We said, look, this movement to the downside is impulsive, but it looks like it could be a 1 or an A. We don't know yet. This movement to the upside looks like an A, B, C correction still, but it could be a 2 or a B. And this movement to the downside either is going to be a 1, 2, 3, 4, 5 of a wave C, and then we'll see a continuation to the upside, or we're going to get a follow-through, and it becoming a wave 3. Now, we don't know yet, so we're in limbo right now, and let me show you why. Because one of the key secrets to consistent success is to trade in the direction of the higher degree time frame. So we're looking at a 4-hour chart. So the higher degree time frame in this particular example is the daily chart. So if I just pop out of this chart, go to the top right hand corner, and look at the momentum on the daily chart. It is now officially the blue line over the red, and it's bullish. So if this was bearish right now, if it was bearish, it's not, but if it was, I would look for further trade setups to the downside, and there is currently a good setup to the downside. However, it's against the higher degree time frame momentum, which means we stand aside. Even if it looks like a perfect textbook setup, which it actually does, we have to stay disciplined and play the odds and play the probability. Always. So we always trade in the direction of the higher degree time frame. And in this case, it's the daily chart. And right now, the daily chart, as you can really clearly see, is bullish. The blue line is over the red. That says we should only be looking for long opportunities. So we stand aside. Because if I jump back into the 4-hour chart again, bottom left, what do we have? Well, there's a couple of things that we have. And we're not going to trade this because we're going to stay disciplined. Is the momentum looks like it's making a bearish reversal. I'm just going to clean this up so you can see what I'm seeing over here. What it looks like, again, we're not trading this. So why I'm showing you this is even when it looks as good as this, we just don't break our trading rules, which is trade in the direction of the higher degree time frame. This to me looks like a very clean 1, 2, 3, 4, 5 to the downside. From a pattern position, it does look like an ABC. Look at this, A, B, C. The momentum has a bearish divergence as the momentum's going down and the price is going up. We could also do Fibonacci price and time. And so we've got pattern already. I'm showing you this because there's a couple of reasons. One is amateurs will take this trade, and even if it unfolds perfectly to the downside, we make the right decision by standing aside. Okay, 50% is the typical minimum correction where we're in that zone. 100% alternate price projection. This is just some of the textbook Fibonacci price analysis. So what I'm showing you here is this looks like a really good setup to go short. Everything is in play other than the higher degree time frame momentum. And I'm going to show you what we're going to do, especially in this situation. So and we're also going to do some Fibonacci time. Let's do some time analysis. I'm going to be launching some more time training. All right, so we're just beyond the extreme over here. I'm not going to talk through the detail. I'm just quickly doing this, just so we quickly see the basics. Bom, bom. All right, so we've got momentum. Sorry, we've got pattern. We got ABC pattern. We've got momentum on this current time frame, we've got Fibonacci price and we've got Fibonacci time. So there's a few factors that are indicating that we're likely going to see movement to the downside, but the higher degree time frame, which is the daily chart, is now against us, like it's literally pointing up. So we've got two options. The first is we stand aside. So what we do is we literally just say, all right, we're going to wait for the next bearish reversal. We might get it in the overbought zone, or it might happen a bit sooner, but we just wait patiently for the next bearish reversal and then review if the chart is still in a technical position for entries. The other option is we can actually drop down to a lower degree time frame and then trade where the 4-hour chart is the higher degree time frame and then the 1-hour chart is the lower degree time frame. We're not going to do that, but for entertainment purposes, let's just have a quick gander at what it looks like on the 1-hour chart. So this is a 1-hour chart. We can see that the market has moved up in a nice 5-wave, well, it looks like some type of very impulsive sequence. We've got some swing lows over here. And we've also got the next bearish reversal with some bearish divergence. So you could, I'm not saying we were going to, you could go short on this swing low over here. Very, very tight stop loss. And then we put a stop loss at this peak over here. So we want to be entered in with some follow through. And what we would do is we would literally take this wave over here, and our insurance position will be, and the reason I'm showing you this is the exact same principle whether your higher degree time frame is a weekly chart and then the lower degree in time frame is the daily, or the higher degree time frame is the daily and the lower is your 4-hour, or the 4-hour is the higher degree time frame and the lower degree time frame is the hourly chart. So you'll see it's the same mechanics because it's all markets and all time frames. So what we would do, if I just, let me just change this to, let me just get rid of this so it's nice and clean. So what we'll say is our risk would be this, and the minimum that we would anticipate is this to the downside, and would look to become risk-free at this point. You know, this is our insurance position if we took this trade. Again, I don't like to trade on an hourly chart because there's too many moving parts. Ideally, like to apply the same principles on a daily, weekly, and a 4-hour chart. That tends to work a lot better. But this is a valid trade on this degree time frame because you can see that everything was marrying up on the 4-hour chart and then on the daily chart. So as I'm looking at it, I'm like, this is a textbook trade setup. Anything else that we would look at? No, not really. It's made the bearish reversal. I just want to see what the momentum. Sometimes when it's a bit choppy on the, I like to just have a look at a couple of the settings on the momentum indicators, because we want the indicator that gives us the best information. So this one might be the smoothest. It marries up to these highs very, very well. It's the 21.1388, and we can see that it hasn't made it kind of made a bearish reversal, and then pop back up again. So this one is looking, yeah, this you can also, it's a double look back. So the 21 and the 13, I guess the triple look back, and the 8, let's just have a look at the 8, are all saying pretty much the same thing. So it's a high probability that we're going to see some downside movement over the coming hours, next few hours. We see how it unfolds tomorrow. You know, I don't know. So what's going through my mind right now, I don't normally look at an hourly chart. I'm doing it for the purpose of this video, because there's some good lessons to be learned. Because the market, these Elliott wave patterns, 5s and 3s, ABC corrections tend to unfold on the larger degree, you know, swings that take weeks and months to form, but also on minutes and hours. It's like the exact same thing. So everything hangs together over here. So we could, if your trade plan allows for it, take a short position over here but we would need to manage it intraday. Intraday meaning, if I just do some basic time analysis on this swing, if this was the swing, we're talking about buy or before 3 p.m. today. So right now, as of this bar, it's 7 a.m. or it's 7 a.m. give or take. And then we're talking about 6 hours. 6 hours, we want to be high alert. So if you're able to be in front of the computer intraday, during the day, and we could set a price alert over here, we could go short over here, because this is a valuable lesson, because it's, some you have day traders, you have swing traders. I like the swings more so. But what you could do is enter on a lower degree time frame and manage it on a higher degree time frame. So this is I'm considering taking this trade, because I'm just thinking in my mind, am I going to be in front of my computer or able to be in front of my computer? So because how I trade is, if the market goes like this, I wouldn't exit at a fixed price point. I would trail the stop loss. So we would move our stop losses to break even, which is highly probable, and then we will trail the stop losses over here. But let's just finish on one last thing over here. So what we're going to do, we don't want to get too distracted, is if I go back to the daily chart, and I'm just going to zoom in like so. What we have on the daily chart is, I've just adjusted the wave count. What I've said over here, because of the momentum position now, the weekly momentum in the top left-hand corner is indicating to us that we're likely to see a major low. Like they're both oversold and bullish, right? It's a double look back period on the weekly, which is significant, which says the downside should be limited. We should be at or close to a weekly low. And then on the daily chart, we've got a bullish reversal on the momentum, which we've acknowledged already. We've got a bullish reversal. So then this tells us, this is why I don't like to go against the daily chart. Sorry, let me just go here. I know I'm jumping through charts. So what we might be seeing over here is that we've already achieved the low, and then this movement to the upside was just the first move to the upside, and we've got a correction happening, and then we're going to get a continuation to the upside. Is that going to happen? Well, we don't know yet, but what we do know is the market is currently in this position on a 4-hour chart. In this position on a 4-hour chart. The main thing that I'm going to wait for is either this high to get broken, or for this low to get broken. And that will give us a better indication of where the market's going to move. If this low does get broken, we're probably going to see a continuation to the downside, and then we'll look for more shorting opportunities. So we might need to wait 1, 2, 3 days, maybe 4 days for the daily momentum to go bearish again. And it's good to be patient, knowing that you can go long, you can go short, and then the other position is you stand aside and be patient for the next high probability setup. If, however, we get follow through to the upside and we break this high, this will be the first major indication that this is in fact a wave C low, and this was just a whole big A, B, C correction, and then we should get a continuation to the upside, and then we'll look for major long opportunities, major long opportunities. But right now, from a daily and 4-hour chart perspective, the technical position from an entry position is we stand aside. Nothing to be done over here. Even if, this is just part of the game, even if the market does move in our direction, well, then over the next couple of days, the daily momentum will go bearish and there will be some type of pullback. And that pullback will be when we're looking to enter, which will make it more highly probable as opposed to it being quite risky at the moment. So if you like today's video, like, subscribe, hit the bell notification, because we're really going into the practical. And if you haven't done Elliott Wave and Fibonacci, I've actually got a Fibonacci and Elliott Wave Masterclass, is in the link below, and it covers this in depth, how to do the counts in 5s and 3s, some of the technical positions that you want to be really, really aware of, the 3 fundamental rules, and some of the key ratios with Elliott Waves and Fibonacci price that you want to really be aware of, especially for wave 2 corrections and wave B corrections. You know, we're looking at an ABC correction potential, or a wave end of wave C or end of wave 2. We don't know that yet. So it's really, really helpful to know that information. So let's finish today on a quote. The quote of the day is the one that we looped at the beginning, and we're going to loop it right now, is rule number 1, never lose money. How do we never lose money? Well, you know, take that with a pinch of salt. We cannot guarantee that we never lose money, because when we're taking a trade, we've got capital exposure, and you should be risking, you know, 1%, 2%, 3%, no more than 5%. I go for 3% and then split it into 2. Where I've got my insurance position and my profit-taking position, or my profit wave position as such. So never lose money is really, it's risk management, it's capital exposure, it's trailing your stop loss, it's being patient for very high probability setups on the time frame that you like to trade. If it's weekly, daily, or if it's daily 4 hour, or if it's 4 hour and 1 hour. And we actually looked at all of those today, so it's to know that. And then rule number 2 is just never forget rule number 1. So a lot of the time people focus on making profits. Actually, you want to be focusing on the downside and having perfect high probability setup. So you find the edge and then you trade the edge consistently. And if the edge isn't there, we stand aside and wait for it to meet our minimum criteria. And right now, for the daily and 4 hour, we need both momentums to be in the same direction. And right now, we've got a bullish reversal on the daily. That means we're in limbo. Even though it looks perfect on the 4 hour chart, we go, look, we'll just wait patiently. Even if we miss a wave, there'll be some type of pullback, and there'll be another opportunity. The next opportunity train will come, and then we can jump on that. So if you like today's video, like, subscribe, hit the bell notification, take the free Elliott Wave and Fibonacci Masterclass, enjoy it, take loads of notes, because, you know, today was day 17. And we see we made 11.9% in, it was a whole portfolio in 17 days, and this is where the wave hasn't taken off. Imagine if it did take off. Geez, we'll be like 20, 30, 40, 50% profits right now, but it hasn't taken off. So we just consistently do what we're doing, and when it does take off, we look to ride that wave, compound that wave, add positions until the trend. And we'll finish on this quote. The trend is your friend. Ride it until its end, until it reaches its bend. Take your profits, stand aside, and then we'll wait for the next trend. So we're Elliott Wave surfers, and we just surf the waves. All right, I'll see you tomorrow for day number 18. And follow me on BNB. We're 11.9% up. Let's see how this unfolds over the coming days and over the coming weeks as well. All right, I'll see you tomorrow.